Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, it's great to have you on the show.
Thanks very much, Brian. Great to be here.
Now, Jeff, before we get your insights, let's take a quick look at how the markets are doing. We have the Nikkei, which is in the red territory. It's down 0.53% at 25,499.31. Shanghai Composite is marginally up at 0.1% at 3,366.53. The Hang Seng is trading at 26,449.07. It's up slightly at 0.35%. ASX 200 is down 0.02% at 6,545.9. The Kospi is up slightly 0.1 to 2,549.88. The SGX is trading at 2,800.4. It's marginally up 0.84%. And Bursa Malaysia is trading at 1,596.72. It's up 13.04 points. Now, Jeff, if you look at the markets, trading's rather mixed across the region. Now, despite the optimism earlier this week, what's driving this nervous sentiment?
Well, we've been in a bit of a profit-taking market all this week. When we saw the first Pfizer vaccine announcement came out, the markets quickly priced in 2 years worth of global growth in 2 hours on financial markets. And since then, we've seen the momentum ebb. And what we've seen, a lack of new drivers this week, has seen profit-taking coming in and investors taking money off the board, especially those who have probably banked some quick profits. That was set to continue today, but overnight, Wall Street reversed course after the news broke that the Republican Senate members will be returning to the negotiation tables with the Democrats over a follow-up US fiscal stimulus package. That's lifted markets in the United States. The follow-through hasn't been quite as strong in Asia today because I think Asia's been led to water over these hopes before, and they'll want to see some concrete action before fully buying into a second fiscal stimulus rally, so to speak.
Now, Jeff, I've got to ask you, something's just popped up over the last few minutes. And apparently over $6 billion of bond sales have just been canceled across China. And there's a little scare about default with these state-owned enterprises. What's your take on this?
There's been a lot of concerns for some time now about governance and the actual opaque nature of finances of many Chinese companies. The ones that we're talking about now that you mentioned have an implicit state guarantee, but not a written one. And I think what we're seeing now is a trend where the Chinese government isn't necessarily going to let these state-owned zombie companies continue on life support forever. It's expecting them to raise standards and run their businesses properly. We are seeing a few corporate defaults across China, but I think it's actually positive that the government's prepared to allow the normal course of capitalism, if you like, to take its course and not backstop indefinitely or infinitely poorly run companies. I don't think, though, that we're on the cusp of a giant wave of bond defaults across corporate China. So I think this is bad news, obviously, for those bondholders, but actually in the bigger picture, it's actually quite good news for the development of China's corporate markets.
Okay, so then not something to get overly concerned about.
No, I don't think so at this stage.
Now, it's Friday midday. What should we be looking out for this afternoon?
Well, it looks like a pretty quiet day. I mean, Asia, as I said, hasn't fully bought into this stimulus rebound hope rally that we saw in the United States overnight. It's bought into it modestly, but when markets are quiet like this, they're vulnerable to headline risk. And we have the APEC summit today being held virtually, but President Trump apparently is attending. So we're looking for a bit of headline risk. I'd suggest that it could potentially come out of there. In Europe, apparently Brexit negotiations, the trade agreements are going quite well, despite the fact that they're being virtual and they've had COVID-19 amongst some of the European side of those parties. There are press stories circulating that there may be a deal signed on Monday. If we see any more news out of that, I think we could see a big jump in UK equities and also quite a large jump in the UK sterling, which has been very firm over the last few weeks anyway. So if I was looking at it, I would say headlines out of the APEC summit and potential Brexit trade negotiation news, lifting markets in Europe, notably in the UK, would be my two risk points this afternoon.
Now, Jeff, I want to talk a little bit about a sideshow that seems to have just slipped under the radar amid all these conversations about the US election, RCEP, and vaccines. Now, it's the Chinese-Australian boxing match. With the Australian economy really absorbing blow after blow, but markets are just shrugging it off. And after all, China is Australia's biggest trading partner by a country mile. So give us your views on this. How did this kind of slip under the radar?
Yeah, in a word, I'm surprised. Yeah, so I thought this would have a more negative effect on the Australian markets, and we've seen no sign of it going through to Australian equity markets or the currencies at all. And it's quite wide-ranging, these export unofficial embargoes that are being put on Australian exports. Having said that, this week, the data that's come out of Australia has been absolutely fantastic. They had absolutely unbelievable employment numbers yesterday, huge numbers, 97,000 full-time jobs added, manufacturing's going great guns, consumer spending. So they're definitely in a recovery mode anyway. I think this highlights the risks that Australia has put itself in of being a bit of a one-trick pony. So China is their buyer of last resort, and they've allowed that concentration risk to ratchet up. You know, if it was going to react negatively, I think it would have done so by now. Maybe this story is a story for January and February 2021, when we start seeing those effects making their presence felt. But in the meantime, it's really not much of a story, and all the data out of Australia is quite positive. It probably highlights that what's going on in the United States, whether we have a change in government or whether it's fiscal stimulus, monetary policy stimulus, that's the real game in town and the real driver of financial markets at the moment.
Now, specifically on the Australian issue, I think one of the things we have to color the great numbers that have come out is two particular things. One is the fact that I'm sure most of those numbers of increased hiring came out of Victoria, because obviously the lockdown has been completely lifted. And the second thing is also the fact that a lot of the employment numbers in Australia are being basically propped up by their JobKeeper and various other job schemes, which all expire in March. So what's your view on that?
Well, yes and no, Brian. I mean, when you look at the employment data particularly, the lockdowns were still in place in Victoria in October when that data came out. So I think it's showing quite a lot of underlying strength. Now, they are a volatile set of numbers, the Australian employment numbers, but Australia definitely appears to be on a recovery track. Commodity prices are at very, very high levels. And this China thing aside, domestic consumption seems to have come back with a massive hiss and a roar, and I think that is supporting the economy. By the time we get to the end of March, we should have some of these vaccines on the market, and we will hopefully be seeing a light at the end of the tunnel. But I firmly believe that even if the trajectory isn't firm by then, the federal government won't hesitate to extend that JobKeeper program, and the Reserve Bank of Australia will be very supportive of monetary policy. So I think between the two of them, they will do what it takes to keep Australia ticking over until we get through this COVID-19 pandemic.
Hey, Jeff, as always, thanks for your insights. We've been speaking to Jeff Halley. He's the Senior Market Analyst, Asia Pacific at OANDA. Now on BizTech's Midday Market Watch, I'm Brian Fernandez. Check out www.biztech.asia for business and technology content.